This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
Deal or no deal? On Capitol Hill, the meetings continue behind closed doors. On Wall Street, investors watch and wait, wondering whether softening rhetoric can produce a hard bargain and fast.
The world warns the U.S. must get its act together or risk dragging the globe back into recession. And China, the largest holder of our debt, has the harshest words yet for Washington.
And the health of the exchanges. And now that some of the issues plaguing the federal health marketplaces have been identified, are they too complex to be fixed? We have all that and more tonight on Nightly Business Report for this Monday, October 14th.
Good evening, everyone, and welcome. There is no deal yet, but after weekend talks between the White House and congressional Republicans apparently stalled, Senate leaders are talking today, and it looks like progress has been made. All of Wall Street, like everyone else, is waiting to hear whether lawmakers are any closer to a deal that would extend the nation's borrowing limit and reopen the federal government, at least for a little while. John Harwood joins us now from Washington with a look at a possible framework of a deal that Senate leaders are hammering out right now. John, it's been a day of meetings set and meetings canceled.
And Tyler, it's not just Wall Street who's watching. So is the White House. So is the House of Representatives. All the pressure is coming down on Washington to make a deal before we hit that debt limit finally at the end of the week, according to the Treasury. And all the pressure is on two leaders in the Senate, Harry Reid and Mitch McConnell. Both of them came out on the Senate floor this afternoon and said it's looking good.
Constructive good faith negotiations continue between the Republican leader and me. I'm very optimistic that we will reach an agreement that's reasonable in nature this week.
We've had an opportunity over the last couple of days to have some very constructive exchanges of views about how to move forward. Those discussions continue, and I share his optimism.
And what we think we know about that emerging deal, though it hasn't been announced yet, are you'd have a continuing resolution reopening the government that would go through the middle of January. That is a shorter period of time than Republicans wanted because they wanted to preserve the lower sequester spending levels as long as they could. The debt limit extension would go through the middle of February, February 7th to be exact. That is shorter than Democrats wanted because Republicans want to keep the pressure on. There would be a negotiation during that time. There does not appear to be a rollback or repeal of the medical device tax that some Republicans had asked for. There will be strengthened income verification for recipients of subsidies under Obamacare. And as a trade for that, Democrats are going to get something labor unions have asked for, which is a delay in the reinsurance tax, which labor unions complain hits their members too hard, Tyler.
It's Susie. Hi, John. It sounds like that some of the main issues that were on the table in the beginning have been pushed off, and that this is all about pushing all the problems down the line. Is this what it's come down to? There is no credible plan about getting long-term spending under control, right?
Well, the plan, Susie, is to commence negotiations. You know, this is a stopgap, first to reopen the government, second to remove the threat of a debt default, but it is in the service of creating a budget negotiation between the House and Senate, accelerating one that was stalled earlier in the year. But yes, the assumption on all sides is that they negotiate some sort of a deal, big or small, that relieves part of the sequester but substitutes longer-term entitlement savings. And the question, which will determine whether it's a big or small deal, is whether there's also revenue, as some Democrats have asked for, in the form of closing tax loopholes.
Okay, that's a big issue as well. Well, we'll see what happens over the next couple of days. Thank you so much. John Harwood reporting from Washington. Well, optimism about a possible Washington deal sparked a sizable U-turn on Wall Street today. The Dow erased an early triple-digit loss, ending higher for the fourth consecutive session. And good things came in little packages for investors today. Both the Russell 2000 index of small-cap stocks and the S&P 400 index of mid-cap companies closing at historic highs. At the end of a breathless day of waiting for any news out of Washington, the Dow rose 64 points. The Nasdaq was up dropped 23, and the S&P added 7 points.
And joining us now to talk more about the latest developments in Washington and what the uncertainty means for the markets and the economy is Gregg Valliere, Chief Political Strategist at the Potomac Research Group. Greg, good to have you back with us. You heard what John Harwood just said, and I'd like you to sort of add to that if you know anything that is new or different. But let me pose the question to you this way. A week or so ago, there was all the talk that we weren't going to negotiate anything having to do with Obamacare as part of any deal to raise the debt borrowing limit or reopen the government. And what John just described was that there's going to be some movement on income verification as part of the Obamacare, and that a tax on union participants that unions found objectionable is going to go away. Should we just not believe what they say ever and just watch what they do?
Good point, Tyler. Absolutely. And I hate to be the skunk at the picnic this evening, but I'd just point out, first of all, I haven't heard from anybody in the House. These senators, bipartisan group, are getting close to a deal, and maybe they'll have one in a day or so. But I think the House is going to weigh in, and it might not be real warm and fuzzy from that body. Number two, even if we get a deal, guys, all we do is just postpone the crisis. We kick the can down the road. There'll be another crisis in January on the government staying open, a crisis in February on the debt ceiling. So it's not as if we're going to wrap all this up in a neat little package in the next few days.
And I think you really nailed it there, Greg, because anybody you talk to is so fed up by watching this process, whether you're a Democrat or Republican or anyone around the world has been very frustrated by this. So I guess, who won, and when we do get the deal, who won and who lost, and where are we going with all of this for the next round?
Well, you're exactly right. And I would say that, well, obviously, there's not going to be default. Chances of default are like 2%. That's not what the market is worried about. I would say, though, that if we have just continuing crises, one after another, are we going to shut the government down again, another debt ceiling crisis, that has a very corrosive impact on the economy, for business psychology, for consumer psychology. It's not a good story for a recovery that's still pretty fragile.
There's got to be, Greg, a bit of a growth tax in all of this lurching from one crisis to the other. Can you imagine a world where we really came to some long-term agreements on budget policy, on tax policy, and on levels of debt, and what that would do to business confidence and hence to economic growth in America?
Amen, brother. I mean, what people want is predictability. And that's the one thing, even with a deal later this week, there still really isn't predictability. We still have a lot of issues to go through. Two very positive stories quickly. Number one, the Fed will have to keep very dovish for weeks or months to come. I think the first time they'd even really seriously think about tapering would be in late January. That's a good story. And number two, despite all of this, the budget deficit is plummeting. We get new numbers in a couple of days on the previous fiscal year. These will be astonishing figures showing that the deficit continues to fall dramatically.
In a few words, Greg, just want to ask you, does the government open by the end of the week, and what if there's no deal? Real quickly.
Yeah, I think it opens by the end of the week, but we still got a long way to go to get all this stuff resolved.
All right, Gregg Valliere, thanks very much, Chief Political Strategist at the Potomac Research Group.
You bet.
Well, with no deal from Washington to raise the debt limit or reopen the government for now, companies big and small are left in the lurch, and they can't make long-term planning and spending decisions. Mary Thompson has more.
As lawmakers battle over the budget, corporations face a struggle of their own. How to plan for next year. Here's TD Ameritrade CFO Bill Gerber.
I think the issues right now are just so uncertain that people are not able to assess where they should go and what type of environment you're going to be in, so people get into a wait-and-see mode.
For over a year, corporate America's kept a tight grip on its cash, a grip unlikely to be loosened by a temporary increase to the debt ceiling. That's because the U.S. could still default if a deal isn't reached in 3 to 6 months, and mandatory budget cuts known as sequestration could still take effect. Lastly, if a deal is struck, who knows if it might contain new taxes that would impact business. Lots of questions and not enough answers to make a long-term plan. Here's former Citigroup Chairman Dick Parsons.
If they had confidence that they knew what the contours of the landscape they'd have to traverse were, I think they'd start investing again.
But given Washington will likely kick the can down the road, that's a big if. Gordon Bethune, former CEO of Continental Airlines and now a director at Sprint, Honeywell, and Prudential, told us executives' reluctance to spend is understandable because, quote, you don't know what the next step is and you don't know if you're going to step on a bomb or it's going to set you free, unquote. Firms of all sizes impacted by Washington's indecision, firms like Linden, New Jersey-based Flexline, a maker of metal hoses that are used in a variety of industries. In an email, President Jeffrey Scheininger wrote, temporary fixes do not allow our customers to plan. It makes revenue streams and therefore planning chaotic, and does so for everyone in the supply channel. Blanket orders go out the window, lead times get pushed out, which causes our costs to go up. It's a mess a temporary fix won't clean up. For Nightly Business Report, I'm Mary Thompson.
Well, workers at another huge private employer may be idled if the partial government shutdown continues. Boeing, the aerospace giant, says it may begin furloughing workers at its defense, space, and security units. That's because of stop work orders, limited access to federal installations where some of its employees work, funding cuts on joint projects with Washington, and a shortage of government inspectors.
Some top bank executives are warning about the dire consequences of the U.S. breaching its borrowing limit, something that's never happened before. J.P. Morgan chairman and CEO Jamie Dimon described a bleak situation, saying as you get closer to it, the panic will set in and something will happen. I don't know personally when that problem starts. Also speaking out, Deutsche Bank co-CEO Anshu Jain saying his company had been making contingency plans in case of a U.S. default, but added, quote, you don't want to go into all of it. This would be a very rapidly spreading disease.
And more fearful words about a possible default from Christine Lagarde, the managing director of the International Monetary Fund. Speaking on NBC's Meet the Press Sunday, Lagarde warned about the disastrous impact of a default on the U.S. and around the world.
If there is that degree of disruption, that lack of certainty, that lack of trust in the U.S. signature, it would mean massive disruption the world over, and we would be at risk of tipping yet again into recession.
Lagarde also said that creative accounting would not be the solution and that the U.S. has an obligation to the rest of the world to preserve its safe haven status.
But perhaps the most critical words about Washington's inability to raise the debt limit and keep the government open came from China. That nation's news agency has called for a, quote, de-Americanized world, along with an end to the use of the American dollar as the world's international reserve currency. The Xinhua news organization also said the destinies of the people around the globe should not be left in the hands of a hypocritical nation with a dysfunctional government.
Well, that's the view of official China, but how do ordinary Chinese people feel about what they see happening in Washington and its effect on global markets? Eunice Yoon takes a closer look.
The political gridlock in Washington is almost as big a topic in China as it is in the U.S. That's what happens when your country is the largest foreign holder of American debt. I hope they can talk it out, this man says. That's our hard-earned cash. China is frustrated that the U.S. is playing what it sees as a political game with the global economy. If American lawmakers can't reach a deal by an October 17th deadline on raising the debt ceiling, the United States could default on its debt, potentially hurting the world and China.
The U.S. debt ceiling debate is in all the Chinese papers. This one says the clock is ticking. China urges the United States to clean up its debt problem. And this one says that the U.S. debt ceiling is ruining America's credibility.
In one state-backed editorial, the official news agency is calling for a new de-Americanized world order. But America isn't the only one being blamed. People here are angry at their own government, too. Chinese politicians need to do something about this, he says. China maintains controls on its currency, helping to support exporters here. So it's amassed huge dollar reserves and can't do much about it other than invest in U.S. treasuries, $1.3 trillion worth. However it works out, America's reputation is taking a knock in the eyes of a bewildered Chinese public. America sees itself as a superpower, he says. Now we know they're just like everybody else. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Still ahead on the program, why the government shutdown is forcing one rural family into a more expensive mortgage, paying more for their new home than they ever expected. But first, let's take a look at how the international markets closed today.
Well, as the government shutdown stretches into a third week, time may have run out for some home buyers. A small but critical federal home loan program for rural buyers is still on hold, leaving would-be homeowners in the lurch and costing them thousands of dollars they never expected to have to pay. Diana Olick has the story.
The good news is Tom and Casey Malloy were able to sell their two-small Baton Rouge home. The bad news is the government shutdown shut them and their 5 kids out of a great deal on a move-up home.
We get the phone call that, hey, you're approved, but the government shut down and your government-backed USDA loan cannot be processed, so therefore you have to wait.
The Malloys had planned to use a Department of Agriculture rural development mortgage, a no-down payment, 30-year fixed product designed for families like them. But with their current home sold and their closing approaching for the new home, they couldn't wait any longer.
We've been scrambling to try and figure out ways to either extend contracts or, as in Tom's case, to move to less desirable loans.
The Malloys switched to an FHA loan, which required a $10,000 down payment and high fees. Their monthly payment is $150 more than it should have been.
My wife and I are both just middle-class working Americans, and to have a bickering match between Congress and the Senate and the White House cost my family their home and my family $10,000. That's a lot of money to us. You know, we don't normally have that.
The USDA program is small, barely 2% of the market, but it's a big deal to rural communities who rely on this type of financing for more than just home loans, but for commercial real estate, construction, new jobs, even upgrading electric and telecommunications infrastructure.
Pretty stressed out, very unsure where our country is heading and how we're going to provide day to day for our children.
For the Malloys, it would have meant extra money to build a much-needed addition on the new home and to buy new furniture they had already promised the kids.
This situation might not affect a lot of the members of the House, but it sure affects all 7 members of this House. It's costing us dearly.
Diana Olick, Nightly Business Report, Washington.
Moving now to our Market Focus segment. Netflix TV could be coming to your cable box, and that's where we begin tonight's Market Focus. Netflix, the largest video streaming subscription service, is in talks with several cable companies about building its app into new cable boxes. The potential partnerships may include cable giants like Comcast and Suddenlink. The news sent Netflix up by almost 8% to $324.36. Shares of Whirlpool dropped sharply today on reports of weak appliance demand. Channel checks by Longbow Research show that customers were delaying big-ticket purchases in the last week of September and into October because of the approaching debt ceiling deadline. But it's not all bad. The research firm also expects purchases to rebound once a deal has been reached in Washington. Meanwhile, Whirlpool stock fell 6.5% today to $131.29.
And shares of Expedia dipped today after the stock was downgraded by Deutsche Bank to hold from buy and its price target cut to $51 a share. The firm believes Expedia will be forced to cut 2013 guidance following recent management changes at Hotels.com and increased competition here in the U.S. The stock lost 6% to $48.51, and shares of Advanced Micro Devices, they edged higher today after Wedbush upgraded that company to outperform from neutral. The analyst says the chip maker will trade higher as sales of new gaming consoles grow, and predicted that the company will take a bigger share of the server market. The stock up more than 3.5% to $3.97.
So how long do you think that you'll have to keep working? A new survey says longer than ever, and that's because of the recession's impact on retirement investments and home values. A new poll from the Associated Press and the NORC Center for Public Affairs Research shows that nearly half of respondents over the age of 50 now expect to retire later than they previously planned, and more than 80% of them say they'll likely need to continue earning money even after they officially retire.
Well, if you're looking for a sizable increase next year in your Social Security check or your veterans benefits or federal pension payment, it's not likely to happen. Preliminary figures suggest that next year's increase will be only about 1.5%, the smallest boost since the annual cost of living adjustment to federal benefits began back in 1975. The main reason, consumer inflation, as measured by the government, hasn't risen very much over the past year.
It's almost 2 weeks now since the rollout of those health care exchanges. Computer glitches prevented millions of Americans from signing up for the new insurance plans. But is there any progress in fixing those problems? And can they be fixed? Bertha Coombs has the story.
Government contractors are continuing to make fixes to the federal exchange. Last week, Health and Human Services Secretary Kathleen Sebelius promised the issues would be resolved, but couldn't say when.
We're hoping in the very near future to have a seamless process. That's what we're aiming for. No wait time, straight through, make sure it all works well.
But analysts and insurance executives say the underlying software flaws in the way the federal online insurance marketplace was constructed are more complex than a simple glitch, and it's unclear how long it could take to resolve them.
We're in a place now where there's so much wrong. Yeah. You just don't know what's broken until you get a lot more of it fixed. And I think we have to plow through it.
It is early in the enrollment process, which runs for 6 months. But the Obama administration has targeted covering 7 million people under the Affordable Care Act through the exchanges. That amounts to an average of 39,000 people a day for 180 days. Industry analysts say insurers have so far seen a few thousand enrollees make it through the bottleneck. And according to one consultant, many of those applications have had mistakes, which have required manual correction.
Right now, it's not that big of an issue because carriers are able to do some manual intervention and clean that up. But again, once we get those applications in large numbers, there's no way that the carriers will be able to handle that.
The Obama administration has compared the rocky start of the federal exchange to the launch of Medicare Part D back in 2006, which was riddled with problems that were ironed out over several months. But in this case, the fix may be more complicated, in no small part because the problems may run deeper and the stakes are even higher. Bertha Coombs for Nightly Business Report.
Coming up, how the 3 winners of the Nobel Prize in Economics have helped make you a better investor. First, though, how commodities and currencies performed today. And remember, the bond market was closed for Columbus Day. The price of crude oil ended slightly higher today, but gasoline prices are falling fast. GasBuddy.com says that consumers in 16 states can now find gas for under $3 a gallon from New Jersey to New Mexico, and that 10 more states could see prices dip that low later this week. The national average for a gallon of regular gasoline right now, $3.34. The cheapest price in the U.S. was found in rural Texas, just $2.70 a gallon.
And finally tonight, 3 American professors will share the Nobel Prize for Economics, not peace. They are being recognized for their work on how the prices of stocks, bonds, and homes impact long-term investing. Steve Leisman takes a closer look at today's winners.
2 University of Chicago economists and 1 from Yale sharing this year's Nobel Prize for Economics for their research into what determines a stock price's value. Trouble is, 2 of them have opposite views. Eugene Fama, dubbed the father of modern finance from the University of Chicago, believes investors behave rationally. He says all new information is immediately priced into a stock's value, and after the news comes out, it's folly to try and predict this movement. According to Fama, the best thing to do is to buy index funds and don't pay someone to pick stocks for you. They can't do it. But Robert Schiller, an American from Yale, says markets can sometimes behave irrationally, driven by human psychology, and they go through significant periods of mispricings when high prices are followed by low prices and vice versa. Think of the soaring housing boom and now the long bust.
I have a certain disbelief. Maybe it's because of a habit of thought that I tend to think of my own work as a minor addendum to a huge body of work that others have generated.
The third winner, Swede Lars Peter Hansen, now of the University of Chicago, took Schiller's work a step further and found that mispricing from irrational behavior is because of changes in people's appetite for risk. So what's an investor to do? By giving the same prize to opposite theories, the Nobel Committee could be saying the state of modern financial theory is that both schools have some merit and need more study. Ultimately, they're awarding the groundbreaking research from these three that have withstood the test of time. But they forced investors to think about whether they're investing with FAMA, that is, buying index funds because they can't predict the future, or investing with Schiller, betting on a bubble or a bust, or thinking about Hansen, understanding people's changing risk appetite over time. For Nightly Business Report, I'm Steve Leaskey.
Congratulations to the three of them. It's really interesting that they can't really predict the short-term direction of the stock market, but they can predict the long-term, and that's why index funds came into existence.
I think they give you the best, most economical bang for your buck. Index funds.
Yes, I think they do. And that's Nightly Business Report for us. I'm Susie Garrett. For more on the stories that we covered tonight, head to our website, nbr.com.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we'll see you back here tomorrow night. Deal or no deal?
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
I'm Susie Garrett with the Nightly Business Report News Brief. Optimism about a possible deal to extend the nation's debt limit and reopen the government sparked a sizable U-turn on Wall Street today. The Dow erased an early triple-digit loss, ending higher for the fourth straight session. And both the Russell 2000 index of small-cap stocks and the S&P index of mid-cap companies closed at historic highs. The Dow rose 64 points, the Nasdaq up 23, the S&P added 7 points. Next year's annual increase in Social Security benefits is now forecast to be just 1.5% because of low inflation. There are 16 states where you can buy gas for less than $3 a gallon, according to GasBuddy.com. And for the first time ever, Macy's plans to open select stores on Thanksgiving. Be sure to tune in to Nightly Business Report right here on your public television station.